Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. If your credit score is low or you have limited credit history, getting approved for a personal loan can be a challenge. Many lenders rely heavily on your credit scores, which puts people with poor credit at a disadvantage. However, there are still some options out there for you. Online lenders, alternative underwriting methods, secured loans, and co-signers or joint applications can open up doors even if your credit is not ideal. In this video, I'll walk you through 6 of the best personal loan options for borrowers with bad credit. For each option, I'll explain how it works, how it's good for you, and what drawbacks you have to watch out for. I'll also compare important features like interest rates, minimum credit scores, loan amounts, and special perks. At the end, I'll offer guidance how to choose among them and how to avoid the most costly loan options. So without further ado, let's get right into the video. Number 1 is Upstart, which is one of the best overall options for bad credit borrowers. Upstart tries to look beyond your credit score by using additional underwriting factors, for instance, your education, employment history, your income, and other signals in order to approve some borrowers whom traditional credit-based lenders would decline. At the time of recording this video, personal loan APR range is approximately 6.70% to 35.99% depending on your creditworthiness and other characteristics. The allowable loan amount runs from $1,000 up to $75,000 and terms are typically between 3 to 5 years. There is no strict minimum credit score listed, meaning even people with very low credit scores or thin credit profiles can potentially be approved. One of the biggest advantages of Upstart is that its underwriting is more flexible than traditional lenders because it considers non-traditional factors, as I mentioned before, and it sometimes approves people who may not qualify elsewhere. That gives an edge if your credit isn't great, but you have a solid employment history and solid income. Another pro is that Upstart offers relatively large limits, and it's going to be the highest that we can see on this list, up to $75,000 for a personal loan, which means if you're trying to consolidate debts or finance a major expense, you have room to borrow. The funding process is also fairly quick. Once approved, you can often get your money in a very short amount of time. Additionally, Upstart's approach gives you the chance to build or rebuild your credit. As you make on-time payments, those get reported to the credit bureaus, which gradually will help your credit score rebound. Of course, the flexibility comes at a cost. The upper end of the APR range is quite high. 35.99% is really expensive, and borrowers with lower credit will almost certainly land somewhere towards the higher end, and that means the interest payments can balloon. Also, even though Upstart considers alternative data, it's not a guarantee of approval. If your income is low or your debt to income ratio is high or other financial signals are weak, you might still be denied. Other possible drawbacks is that for some states or in certain situations, there are fees, origination fees in particular, that may be applied and the effective APR may be higher than what you actually think. Also, you want to read the terms and conditions carefully. Finally, because funding is often fast, you might feel rushed into accepting terms without fully comparing alternatives, so be sure to shop around first. Upstart has been known to pull your TransUnion credit profile. I have an entire video where I go into greater detail about Upstart. I'll put the link right here if you want more information about this particular loan. Number 2 on our list is going to be Upgrade. Upgrade offers a more flexible range of repayment terms from 2 to 7 years. That flexibility can help you choose a monthly payment that fits your budget. The APR for Upgrade at the time of recording the video is 7.74% to 35.99%. The loan amount ranges from $1,000 to $50,000 with a minimum credit score benchmark somewhere around 600, meaning borrowers with credit scores around this range are more likely to be approved or have better approval odds. The flexible term lengths are very helpful. If you want lower monthly payments, you can stretch the term. And if you want to pay less in interest overall, you can choose a shorter term. That kind of choice is unusual for a bad credit lender. Second, Upgrade often provides rate discounts for certain qualifying behaviors. For example, enabling autopay, which can help you lower your effective APR if you set this up. Upgrade also tends to have transparent terms and a user-friendly application process. It's known for being relatively consumer-friendly among online lenders. The drawback is that if your credit is significantly below 600, then your approval odds drop. The minimum required credit is relatively high than some lenders that accept very low scores. Also, because you can stretch terms out to 7 years, your total interest paid will likely be higher. So in other words, you'll pay more interest over the life of the loan than you would for a shorter duration loan. So you have to balance monthly affordability against total cost. Additionally, at the higher end of credit risk, the APR can again approach up to 35.99%, so borrowers with weak credit scores should be cautious. As always, there are fees like origination costs that may alter the effective cost of this loan. And finally, longer terms mean you're committed long term. If your financial circumstances change, like you lose your job or anything happens, you may be locked in with a rate that you might regret. Upgrade may also not allow you to refinance very easily. Upgrade primarily will pull your TransUnion score in order to actually qualify you for this loan, so you want to be aware of that as well. Number 3 on the list is Universal Credit, which is affiliated with Upgrade. Universal Credit offers access to credit building tools such as free credit score monitoring that can encourage responsible payment behavior. Its APR range is about 11.69% to 35.99% for borrowers with bad credit at the time of recording this video. The loan amounts can range from $1,000 to $50,000, and the minimum credit score listed is around 560. The terms are typically between 3 to 5 years. Now, one of the biggest draws is the built-in credit tools and incentives. So for example, borrowers may receive a rate discount for enrolling in autopay, encouraging on-time payments. Those on-time payments are then reported to the credit bureaus, helping you rebuild your credit. These non-financial perks like score tracking, alerts, education, they help you stay engaged with your credit health rather than just simply servicing debt. That can have long-term benefits beyond just getting a loan. Moreover, Universal Credit may accept somewhat lower credit scores around the 560 range, which is more flexible than Upgrade's baseline, making it more accessible to borrowers in worse credit shape. And because it's backed by the Upgrade infrastructure, you benefit from a tried platform with established processes and customer support that are very familiar. But the APR range is narrower, and for weaker credit profiles, you may still get hit with that higher 35.99% APR, which is still very expensive. Also, while credit building tools are helpful, they don't solve underlying affordability issues. If your income is too low or your debt is too high, you may struggle to make payments even if you're working on building your credit. Another trade-off is that you may be subjected to similar fees or origination costs as other online lenders also have. Also, the loan ceiling of $50,000 might be insufficient for larger purchases. As with other offers, pre-qualification does not guarantee the exact rate that you'll get until the hard credit check is done, so your final offer might actually be less favorable than what you hoped for. Universal Credit is also reported to pull from all 3 major credit bureaus. Number 4 on our list is Avant. Now, Avant tends to approve funds and loans very quickly, often as soon as the next day after application, which makes it the go-to for urgent needs. The APR range is roughly 9.95% to 35.99% at the time of recording this video. The allowable loan range is $2,000 to $35,000, and the minimum credit score threshold is around 550. Loan terms are usually around 2 to 5 years. The primary benefit is speed and ease. If you need money quickly for an emergency expense, Avant is one of the fastest options. It typically has a streamlined application and relatively fast decisions and funding turnarounds. Also, the acceptance of lower credit scores as low as 550 gives borrowers with the poor credit rating category a reasonable shot. The loan size is moderate, up to $35,000, which may suffice for many common uses like medical bills, repairs, credit card consolidation, and much more. And the term flexibility, which is 2 to 5 years, gives some leeway in choosing a payment schedule that fits your particular needs. Now, fast funding often comes with a trade-off. The interest rates and fees may be higher to reflect additional risk that the lender takes on. Because of this, you will likely be placed near the top of the rate range, and the cost can be very steep. Also, the lower maximum amount, which is $35,000, may not be enough for debt consolidation or for large projects if you have a significant debt. In some cases, Avant will charge origination or administrative fees, which may increase the effective APR, so you must read carefully and examine those fees. The speed can also tempt borrowers to accept terms without fully comparing alternatives. Additionally, fast funding may reduce flexibility in negotiation or reviewing terms, so always read the fine print. I believe Avant will pull your TransUnion report. However, I've also seen reports of Experian as well. Number 5 on our list is going to be Best Egg. Though it's more known as an unsecured lender for good credit borrowers, Best Egg also offers secured loan options for those with weaker credit by permitting collateral like your vehicle. Their unsecured APR range is about 6.99% to 35.99% at the time of recording this video. The usual loan amount is between $2,000 and $50,000 with a minimum credit score of around 600. Terms are typically 3 to 5 years. So listen, the big advantage here is the ability to use collateral. By pledging a vehicle or a different asset, you reduce the lender's risk, which can lead to a better interest rate than an unsecured loan for someone with bad credit. This is a powerful tool if you have assets available. Also, Best Egg is a well-established platform with transparent processes and customer support. However, using collateral is a double-edged sword. Should you default on the loan, the lender can seize the asset, which can be your car, your home, or other household items, which can be a serious risk, and that risk needs to be considered very carefully. Furthermore, the minimum credit score of 600 is somewhat high, limiting accessibility to borrowers whose scores are below that. And even though using collateral can yield lower rates, for very poor credit, the rate might still be high, approaching 35.99%, in which case I would recommend you avoid the loan altogether. Also, the administrative or origination fees may still apply, eating into the benefit of a lower rate. Finally, not everyone has acceptable collateral or they're willing to risk it. For many borrowers, risking a vehicle is not an option. For personal loan applications, Best Egg primarily will use either Experian or TransUnion as the credit bureau to pull your information. Finally, number 6, the last option on our list, is Prosper, a peer-to-peer lending platform. Prosper has an advantage in joint or co-application loans. Applying with another person may improve your odds of approval or reduce your rate compared to applying alone. Prosper's APR range is about 8.99% to 35.99%. And the loan amount can range from $2,000 to $50,000. Prosper accepts credit as low as $560 with terms from 2 to 5 years. One of the nicest benefits is that joint application and co-application structure. If you can find a co-borrower with better credit or income, you improve your overall application profile, making approval more likely, and you may unlock a lower rate. For someone with bad credit but a dependable partner, spouse, or trusted friend, this can be a strong path. Also, Prosper's peer-to-peer model may create some flexibility in pricing, especially for people who fall between tiers. Additionally, Prosper has a robust platform and track record, which can give you more confidence in handling transparency and legitimacy. The primary drawback is that you may not be able to convince someone to co-sign or co-borrow on this loan, and if you do, the risk is mutual. The co-applicant is equally liable for repayment and their credit is on the line too. Even with the co-applicant, your rate may still be relatively high if combined metrics are not compelling. The upper APR of 35.99% could still apply to high-risk borrowers. Also, as with other online lenders, there are fees, origination costs that may add up. You need to examine state availability, platform limits, and any penalties. Finally, peer-to-peer platforms may have stricter policies in certain states, slower servicing, or customer support in rare cases. So read the fine print carefully. Prosper has also been known to pull your Experian credit score. Now that we've covered all 6 lenders, let's recap how they stack up and what might be best for your situation, starting with the minimum credit scores. Upstart doesn't really have a hard minimum because it uses alternative data like your education and employment to evaluate you. Universal Credit and Prosper both accept scores around 560, while Avant goes even lower to around 550. Upgrade and Best Egg generally look for at least 600, though Best Egg's secure option adds flexibility if you can pledge collateral. Next, APR ranges. All 6 lenders fall between a similar APR range, topping out around 35.99%. Where you land in that range depends heavily on your financial profile. Now, borrowers with steady income, lower debt, and consistent employment usually qualify for better rates. Using collateral with Best Egg or a co-applicant with Prosper can also help you secure a lower rate. Taking a look at loan amounts, if you need a larger loan, Upstart offers the highest ceiling at $75,000. Most of the others like Upgrade, Universal Credit, Prosper, and Best Egg cap around $50,000, while Avant goes up to $35,000. After that, we have term flexibility. Upgrade is the most flexible, offering repayment terms from 2 to 7 years. The rest typically range between 2 to 5 years and 3 to 5 years, depending on the lender. Remember, a longer term lowers your monthly payment, but it does increase your total interest cost over time. And finally, unique perks. Each lender brings something different to the table. Universal Credit includes credit building tools. Upgrade and Universal both offer rate discounts for autopay. Best Egg allows secured loans using collateral. Prosper supports co-applicants, which can boost your approval odds. Avant and Upstart stand out for fast funding and quick decisions. And Upstart's alternative underwriting gives those with thin or unconventional credit histories a fair chance. Again, every option comes with potential downsides. Using collateral means risking your assets if you default. Having a co-applicant means sharing liability. Longer terms can often feel easier month to month, but the cost is more overall. And with all these lenders, high APR remains a real possibility if your financial profile is weak. Ultimately, the right choice depends on your situation. If your credit score is very low but your income is strong, Upstart or Avant may be the best for you. If you have a co-borrower, then Prosper will work in your favor. If you can offer collateral, Best Egg might help you lock in better rates. And if you want flexibility or credit building tools, Upgrade or Universal Credit does stand out. One of the smartest steps you can take before committing is pre-qualifying with multiple lenders. Many of these lenders offer a soft credit check, so it doesn't hurt your credit score just to find out if you can be approved. This allows you to see what interest rates you might qualify for before doing any hard credit check. Comparing offers is vital. Don't just look at the interest rates, look at the APR, which includes the fees. Any administrative or origination fees are very important. Are there any prepayment penalties? If there are any at all, because there may not be. The total cost over the life of the loan is important as well, and whether payments are fixed or variable. You also want to ensure that lenders report these payments to credit bureaus, otherwise you lose the chance to actually improve your credit. I want to thank you guys so much for watching this video. If you got value from this, please like and subscribe. If you were pre-approved or approved for any of these loans, please drop that in the comments below with your data points. I would love to hear what your approvals were. If you want me to make another list of personal loans that may work for fair to maybe good credit scores, I can also do that as well. Maybe something with lower APR. I'd be more than happy to make a list of that. And if you would like me to go in depth with any more of these, I can make a dedicated video to any one of these companies, so that way I can give you more details. Once again, thank you so much for watching this video, and you guys have a wonderful day.